The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. I'm Steve Sedgwick, and these are your headlines. Well, Novartis third quarter earnings are hitting the wire as they continue to show strong momentum in the third quarter with 10% sales growth, 20% core operating income growth, and important innovation milestones. So says the statement I'm reading as we speak. Guess what? They've also raised their full year 2024 guidance. We're going to speak to the CEO, Vas Narasimhan, to break down the numbers at 7:30 GMT. HSBC third quarter profit jumping 10% and the lender launching a $3 billion buyback program, saying it's benefiting from slower than anticipated rate cuts. US equities start the week, well, in the green, with the Dow climbing 270 points, investors awaiting key inflation data and big tech earnings. However, over at Volkswagen, Labour chiefs are sounding the alarm, warning of unprecedented plant closures and mass job cuts as the crisis at Germany's largest manufacturer deepens. Novartis shares. Well, nice to see you all, by the way, as well. I'm going to say hello to Sylvia, because she's on set as well. Hello, how are you?
Good morning.
Nice to see you.
Nice to see you too.
You're looking very sparkling today. Did you have a good night's sleep?
Not really, but it's called makeup.
I got an 86 score last night.
Oh, wow.
Yeah, I don't normally get into the 80s.
I can see you're so proud.
Bouncing, I'm so happy. I'm also happy because we've got some really interesting numbers up from Novartis straight away. And as I say, speaking to Vas Narasimhan in an hour and a half's time. So the shares themselves, as you can see, they're up 1 year 19%, year to date 17.6. So they have had a strong rally as well coming into these numbers. I did give you some numbers in the headline, and I think I'm going to be immodest here. I think I've already given you the key point, which is they've raised their full year 2024 guidance. Net income third quarter is coming at $3.19 billion. EPS $1.58 per share. Net sales 12.82 versus the estimate of 12.74. It's beginning to look, the more I look at these numbers, like a ball being knocked out of the park. But let's just carry on a little bit here. Continue strong momentum in the third quarter with 10% sales growth as well, 20% core operating income growth. Sylvia, are you here to look at the numbers as well? Is that what you're doing? I didn't even know that.
That's okay. We're both looking at the numbers, and they are super interesting.
They are super interesting. Why do you think they're super interesting?
They're super interesting because analysts were telling you ahead of these results about one of the question marks was were they going to raise the guidance? They went ahead with it. So that's a positive for investors out there. And we could see some upside to the shares later on today when the markets open. It's also important to keep in mind that when you think about what they reported today in terms of core net income, that was also above what analysts were expecting. Just to give you an idea, they reported $4.1 billion US dollars in core net income. The analysts were expecting something below 4. So a slight upgrade there. When it comes to some of the other numbers we're seeing, overall, strong quarter in terms of sales, growing about 10%. And of course, when you think about what's going on in terms of the pharma industry, this has been a very interesting story because we know how investors have been very much fans of the GLP-1 drugs and how that has actually propelled a lot of stocks, including Novo Nordisk.
Cameron, I spoke to him in September about this.
But Novartis doesn't have any sort of, for now, there's research going on, but they don't have any sort of drugs available at the moment to address that. But what's interesting here is that if at the start of the year you were thinking about that perhaps you're more keen to have a GLP-1 drug stock in your portfolio, actually Novartis has performed a lot better than some of those names out there. When you compare, you have the chart on the screen right now, their shares have performed quite well year to date. One analyst told me yesterday that the fact that it has been an uneventful time for Novartis has actually paid off in terms of their share price performance. So when you think about Do you want a portfolio, if you want to own a pharma stock, do you want a company that has a wider portfolio of drugs, or do you want one that is more focused on diabetes and weight loss drugs?
That is the eternal question in the sector. I remember ever since, and I think it was December, I pretty much remember it was the end of December 1999. I may be wrong on my year, but it's roughly around then, when GlaxoSmithKline joined with Glaxo joined with SmithKline and became one big company. And it was very interesting, SmithKline Beecham, because the fact of the matter is, this is a company that promised vast amount of research for doing everything as well. So since then, have we want to go down a biotech model? Have we want to have like just a specialist in cancer therapies? Again, now you mentioned GLP-1 as well. So specialize or cover a whole lot of bases. I think it's very, very interesting as well. In terms of this, though, one thing I will say is when we spoke to Vas Narasimhan about these GLP-1s and getting involved in the Ozempic-type drugs as well, he was like, no, it's not for us at the moment, I think. And that was my interpretation of the interview as well. And actually, it could be quite useful in the same way that you look at AI as well, because AI stocks are volatile and they come with big premiums or very, very large reactions when you either make progress or you don't on AI as well in terms of turning into revenue and profit generation as well. Maybe having stocks that aren't exposed to semaglutides actually takes away some of that volatility.
Actually, what I'm interested in understanding when we speak with the CEO is what are the ramifications for some of the business of Novartis in terms of the GLP-1 competition? Because we are now in a phase where GLP-1 drugs are being researched and studied in a way that perhaps it can help with cardiovascular diseases as well. And we know that Novartis has a huge portfolio when it comes to cardiovascular drugs. Could that actually be a lot of competition for Novartis going forward? Could these GLP-1 actually impact the business of Novartis, even though not necessarily on the weight loss market, but perhaps on the other drugs that Novartis has available?
Really fascinating. By the way, it was Glaxo Wellcome and SmithKline Beecham, and I was right on my day. They formed the merger fully in January 2000, so the last day of separate trading was on the end
Great
of
memory.
December. Well, sometimes. I'm going to mention something else. I know Will doesn't want me to do this, but I've just seen the best story of the day. I really have, because we're all looking for better treatments as well. Remarkable therapy shrinks aggressive brain cancer by half as well. The trial for new treatment for glioblastoma, which kills most sufferers within a year, has proved successful and will be expanded. And shout out to the doctors over at the University College Hospitals NHS Foundation Trust. If you know anything about this disease, if you've known anyone with it as well, it is foul. It is horrible. And the fact they're making progress on it really makes me happy at the start of the day. And we'll be speaking to the Novartis CEO, Vas Narasimhan, off the back of those third quarter numbers. Don't miss that. First on CNBC Conversation at 7:30. GMT. We're GMT now. Got to stop saying BST. Right, let us move on. HSBC has posted a 10% jump in third quarter profit, coming in at $8.5 billion. That is well above estimates. The bank pointed to slower than anticipated rate cuts as a key driver. It's also launching a fresh $3 billion share buyback plan on top of the $6 billion announced earlier this year. Emily, lovely to see you as ever. You've been waiting for us to get to you. I thank you very much for that. Emily, these numbers are important, but are they as important as the revamp of the company that we've been hearing about in the last few days?
Yeah, that's right. And I'm sure that's what investors, analysts want to know from George Al-Hedari when he's going to be having that conference with analysts at 3:45 Hong Kong time, so that's in about an hour and 45 minutes from now. Just to run you through the headline numbers that came through from HSBC, as Steve was saying, for pre-tax profit up 10% year over year to $8.5 billion, revenue increasing by 5% to $17 billion. They saw net interest income falling to $7.6 billion, net interest margins decreasing by 24 basis points to 1.46%. The new CEO in his first report card calling it a good quarter, which shows that the strategy is working. They're seeing strong revenue growth. They have managed $4.8 billion of distributions in the quarter, and this as the board has approved an interim dividend of 10 cents per share. Now, as Steve alluded to, just in the last week, they have announced a major restructuring, splitting up into 4 business lines and 2 markets, being East and West. And George already indicating that the Eastern market is going to be strong. It has more prominent growth prospects, that being Asia Pacific and the Middle East. They say that they're going to be implementing these plans immediately, and they will share further details as part of a business update alongside with their full year results in February. Also at the full year results is when they expect to be wrapping up or completing their next buyback plan. $3 billion as they've already completed since announced in August. It was 172 million shares that were purchased in London, 173 million shares purchased in Hong Kong. That's $3 billion done and dusted, and now they have announced an additional $3 billion to be completed in the coming 4 months. So a pretty decent report card coming through. I'm sure investors and analysts want to also know about the cost cutting also that is coming through from this restructuring, the layoffs that are being resulted from it. When we heard about the plan, they couldn't quantify it or give any metrics. So I'm sure that that is a question that he will be fielding in a little bit from now. Steve.
Emily, you haven't mentioned the big news. It's your birthday tomorrow, and I know you're off tomorrow, so the last chance I'll get to speak to you. Happy birthday from all of the London team. Got the big news. Happy birthday from all of us. Lovely to see you. Right, Santander has posted a net interest income for the third quarter. I'm not going to read all that. Do you know what I really care about is the ROTE. 16.7%. Eat your heart out, Commerzbank. That's what you can get in Europe if you've got an efficient bank as well. A ROTE of 16.7%. That is quite extraordinary at the Spanish lender, which is also backing its full year guidance and confident of delivering on its targets. Sylvia, these markets, trepidation ahead of the election. What's going on?
I mean, what an exciting time. And we know that there's a lot happening in the markets this week. So let's just digest what we saw in the US during Monday's session. We had a bit of a rally, really, when you think about some of the performances. I want to take you to the Russell 2K, actually, because it was higher by 1.6%. And it does indeed highlight that some of the recent momentum in US stocks is actually quite broad-based. It's not just happening in the big names. We're also seeing a bit of momentum when it comes to the smaller and mid caps. All in all, though, just to give you an idea, we keep tracking what's happening in the tech space. It is a heavy week in terms of earnings for 5 out of the big tech 7. So we'll see what they have to tell us today. We're going to hear from some of them, and that could have implications on some of these equity moves. Looking in terms of bonds, this is what has happened in terms of treasury yields. We know that when it came to the 10-year, we saw yesterday further momentum as investors are continuing to focus really on what the election is going to mean for the fiscal position of the United States. I also want to take you to the currency space. We have seen a stronger dollar in recent times. Again, that narrative about fiscal prudency in the United States, or lack of it, has been impacting this part of the market. But it is actually in the commodity space that perhaps we have seen the biggest moves in recent times. This morning, however, we have Brent and WTI just moving slightly lower at this stage. Yesterday was such an interesting day for oil. WTI was down at 1.6%. And indeed on track to see a worst daily performance. So that has had some impact in some of the equity moves too, in terms of relief. Investors enjoying the fact that we were seeing lower oil prices. But I want to take you to the Asian session so far today. It is Tuesday, the second day of trading week. At this stage, we have a bit of a mixed picture. When it came to the Nikkei 225, that market in Japan still trading higher by about 0.7%. We also saw a bit of a rally in Japanese equities yesterday off the back of the election that took place during the weekend, and indeed the weaker yen had an impact on those moves. When you think about how we're likely to open here in Europe, these are the opening calls. We are seeing that it could be a slightly positive start to the trading session in Italy and in France. A bit of a mixed picture when you think about the DAX and the FTSE. Yesterday, however, we did see gains in the European equities. Just to give you an idea, the benchmark, the Stoxx 600, gained about 0.4% on Monday. And indeed, it started the week on a positive note. Let's see whether that is going to continue, Steve.
All right, thank you very much. Japan's unemployment rate fell to 2.4% in September. Fewer workers were dismissed. It marks a small improvement on August and came in better than analysts had expected. Meanwhile, Japanese Prime Minister Shigeru Ishiba could reach out to smaller parties in parliament, including the opposition Democratic Party for the People, in order to maintain power. This after his party, the ruling LDP, and its longtime coalition partner Komeito lost a majority in the lower house, plunging the country into a period of political uncertainty. Let's get to Cowrie. Cowrie, the gentleman's still in his job. What happens next?
Well, he says he's going to stay, but everyone is wondering how long that's going to be. I mean, what's next is over the next 30 days is going to be very messy because there's a formal nomination process. And the first time in a long period, you don't really know which parties are going to be forming the new government. So obviously the smaller coalition partners are being wooed left, right, and center by the LDP and also the Constitutional Democrats, which won big in this election. And there's one newish kingmaker that's emerged as a result of this, and his name is Mr. Tamaki. He's from the DPP. He's a centrist party, and he made some remarks today regarding the Bank of Japan's monetary policy, which I thought was a little bit interesting. It's a centrist party. He's been talking about possibly cutting the sales tax, but today when he was asked about BOJ monetary policy, he said, look, I think it's too early for the Bank of Japan to start tightening and raising interest rates because wage growth is not on a par with inflation. Now, he's saying that he's not going to join any kind of coalition and that he's going to team up with the parties on a case-by-case basis. But I think given that the Bank of Japan's monetary policy is a key factor, not only for our viewers and investors, but for the economic stimulus environment overall in Japan, I think the fact that he's emerged as a kingmaker could potentially be pretty interesting over the next couple of weeks, Steve.
Yeah, truly fascinating and maybe all the better for your coverage. Thank you very much for that, Cowrie. Right, coming up on the show, is Halloween about to come early in the UK? What does that mean? Is it horror? We're going to discuss what could spook investors, especially bond investors, in tomorrow's long-awaited budget. Plus, Microsoft accuses Google of undermining its political capital ahead of the search giant reporting results today. And Novartis raises its guidance, sales surge. We're going to speak to the CEO, Baz Narasimhan, in a first on CNBC interview just over an hour's time. The UK's Labour government appears to hope that bigger means better with its plans for its first budget in 15 years tomorrow. I think they're going to throw the kitchen sink at this one. Prime Minister Sir Keir Starmer billed the event as once in a generation, seeking to calm markets amid rising gilt yields, with the fallout of Liz Truss's disastrous mini-budget fresh in the memory for many of us.
It's time we ignored the populist chorus of easy answers, because we saw what happens if you reject the constraints of economic stability. And we're never going back to that. That is our choice. Stability to prevent chaos. Borrowing that will drive long-term growth. Tax rises to prevent austerity and rebuild public services. We choose to protect working people. We choose to get the NHS back on its feet. We choose to fix the foundations, reject decline, and rebuild our country with investment.
Well, Chancellor of the Exchequer Rachel Reeves is expected to announce a mix of tax rises, spending cuts and reforms to borrowing rules in order to fill what Treasury officials have sold as a £40 billion gap in the nation's finances. Reeves has confirmed she will relax tax fiscal rules in a move which could unlock up to £50 billion in extra borrowing. But according to The Times, she's expected to use only half of that to fund investment in projects designed to deliver a return to taxpayers, clean tech, infrastructure and the digital economy, whilst also tightening rules on debt. But it's the tax rises that will generate the big headlines, with the government pledging to hike taxes on assets rather than work. That means the possible candidates include employers' national insurance contributions, capital gains tax and inheritance tax. Labour pledged not to raise income tax during the election campaign, but has the option to hold the threshold at which the higher rates apply, of course, extending the freeze implemented by the last government. This, as the Institute for Fiscal Studies says, the number of people paying a higher rate has more than doubled since 2010. Quick look at where the pound is trading. Pretty steady, really, but off its highs. 133 was the high on cable as of late. And the gilts, which, of course, the yields have picked up as people have just got a little bit concerned. So 4.25 there on the percentage. Amanda Tickle is head of tax and trade policy at Deloitte UK. Amanda, nice to see you. I've covered a lot of ground. I can't possibly cover enough ground as well. I'm going to ask you a very generic question. What do we expect? What do you think? Deloitte got the in from the number 11 Downing Street about what's going to happen.
We don't have the in, but I think what's very clear from the Prime Minister's speech yesterday is we are going to see significant tax rises. We have had briefings. Everyone's been having sort of pre-briefings unofficially. So I do think this is going to be a big budget. Of that 40 billion, we think about 35 billion is going to come from tax rises. And the government are looking for those with the broadest shoulders. There's a huge amount of interest in this budget, I think because of the magnitude of the number, the breadth of taxes that haven't been ruled out, and the fact that we've had 117 days now since Labour took office. We haven't had a Labour government for 14 years, and they're going to want to make their mark on the tax system.
It feels a little bit like kitchen sinking, where they're going to do a lot of very early moves now, and then hopefully that's going to bear fruit for the UK economy, for our productivity, for our growth over coming years as well. A lot of our viewers are probably Deloitte clients as well, amongst with the other members of the big consultants as well. What are clients of Deloitte mostly trying to do in advance of this?
Well, look, we've had a huge number of inquiries as to people's specific tax positions, but it really varies from anyone, any sector, all different sectors, all businesses, all taxpayer types are wondering exactly what's in scope for this budget. And actually it's very difficult to tell. Where we do think that they will, you mentioned employers' national insurance, and this is now becoming pretty nailed on as a measure. We don't know exactly what they're going to do. They could increase the rate, apply national insurance to pension contributions, or change the threshold before it's due. And it's quite a large percentage of businesses' cost, actually. It's if you've got a big pay bill, you employ a lot of people and you pay a higher average salary, then you pay a 13.8% tax on top of that pay bill.
I've already had small business owners talking to me privately and professionally about how disastrous this is. Any increasing tax bill for them at this time means they're going to have to let people go. That doesn't sound like a growth strategy to me.
No, well, it's a really fine line the government are treading here, because they really want to encourage growth. They're trying to also, at the same time, announce some measures for certainty for business. So they announced just over the weekend that they would not be changing the R&D regime for small or large businesses, which is encouraging. And they're going to set out a corporate tax, a profits tax roadmap, and cap the amount of profits that will be paid. But you referencing smaller businesses, I mean, I think it'll just...
Who don't have an R&D bill.
Who may not have an R&D bill. So I think it depends how many people they employ and what they're paying. They do get a threshold, so you only pay national insurance over £9,100, and there are some reliefs. So if you're operating in a free port or investment zone, for instance, or you're employing apprentices or younger people. But otherwise, that increase in national insurance will affect employers.
You're head of tax and trade policy at Deloitte UK, so I'm just very interested in what you think this could do for trade. Obviously, Sir Keir Starmer has been talking to Ursula von der Leyen and other European leaders about how we can rebuild relationships without changing the basic tenets of Brexit as well. Is that possible? Can that be done?
Well, I think what's the good thing about what we've heard so far on trade policy is that the government is largely continuing what was already done. Trade negotiations take years, as we found post-Brexit, and with the US, exactly. So, and obviously it depends on the leader who's in place in the other country. I think there's an opportunity to reset relations with the EU, but there isn't much further to go on that actual trade agreement itself. As the government's already ruled out rejoining the single market or the customs union. But I think this budget is going to be really about tax rises and how they're going to make up the set of the 35 billion, what the number of taxes is going to be.
You say, and I probably say, it's about tax rises. They say it's about growth. I mean, how many times Rachel's going to talk about growth tomorrow? I don't know. I'm going to give it it's about 30, 40 times in her budget. What specifically, to offset all the concerns that our viewers, your clients have as well, do you think are the best growth strategies this government is going to bring in?
I think they're going to talk about certainty quite a lot. We've heard this word. I think that they're going to also talk about the future. Resetting the position. I think they're going to announce the infrastructure spending. You talked about changing the fiscal rules. I think that'll be the positive message here. It'll be about stable footing for the UK, creating certainty for business and investment in infrastructure so that where they're operating in the UK, they've got a better infrastructure around them. That's what I think the positivity is going to be.
And one of my city contacts told me that he went into the Treasury before the Kwarteng budget and said, do not do this. This could be a disaster as well. They asked him and then they ignored him. A pretty senior gentleman in the financial community as well. Is there any similarity that you can see? And I'm ignoring the Daily Mail and the Daily Telegraph because they do come from a certain point. But is there any similarity you can see to what Liz Truss and Kwasi Kwarteng tried to do in 2022 and what now Keir Starmer and Rachel Reeves are going to be doing this time around? Should our guilt-owning viewers be worried?
I think that there's been a huge amount of market testing. Most of the things they've considered, I believe, have been sort of floated already in markets, and that was very different from what happened under the Truss-Kwarteng budget because it was all quite quiet. There weren't a lot of pre-briefings, and then there was a big surprise on the day. I remember being extremely surprised about all the measures that kept getting pulled out of the hat.
There was jam today everywhere, but no one was going to pay for that jam.
Well, yes, and so I think this time it's been very well pre-briefed. They've put the numbers out. They've had a very long time. They've had the OBR looking at all the forecasts. So I think that they've tried as hard as they can to make sure that in order to raise the money they need to, they've reassured the market in advance.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.